Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website www.dailymarketmovements.com. I'm going to leave a website link below this video in the description, so if you are interested in joining our amazing team, then please do not hesitate. Scroll down now, click on that website link which will then take you to our website, where you'll see that we only charge a very small fee of $199 for a year's membership. So great value for money. So in front of me is the gold over the US dollar chart, and as you can see, we've had a rather volatile trading day today. We did spike as high as 1735 earlier on in the European session. However, once the US session opened up, we have retreated since then. Since they're down to $1724. We had the manufacturing number which come out just before the US market opened, and Wall Street was expecting a figure of -20, and in fact we got a number of positive 20. So a massive shock there, and that's why gold basically sunk all the way from 1735 all the way down to 17. I think we were trading as low as 1717, but as I mentioned before, we have kind of gone back up to around 1723. But the business, those who are in charge of coming up with like the estimates for these data points, at the moment there's big misses occurring, which is great because it offers the market great money making opportunities, because there's a bigger likelihood of shock. But these people who are in charge of coming up with these estimates, there's a lot of people I've been reading online saying the market's fixed, how can the number be this different to what it actually is. But it's very difficult for these people right now, because obviously we are trading in unprecedented times. So there are going to be big misses with regards to data and their estimates. Anyway, in previous videos I had said that we were trading in a range on gold which was between 1740 all the way down to around that 1675 to 1685 area. So this blue box now represents that channel. So as you can see, the 1740 area on the top offered plenty of resistance, which it kind of acted like a roof in the market, and then on the bottom we had the 1675 area which acted as the floor in the market, where we found plenty of buyers. After drawing up today's chart, I've now discovered that it looks like we're forming a holding pattern, which is like a flag shape, so a ascending triangle holding pattern, which is bullish. This is very bullish. But what this might mean for gold in the near-term future, as you can see, we have been pressing up to the top end of this ascending triangle. It might mean that now going into Friday or potentially Monday and Tuesday, where we do typically see some bearish pressure on gold, we might see gold fall down towards the bottom level, which is around at 1680. Also, we have the 50-day EMA around at 1700 level. So there could be some great opportunities, some great final opportunities to pick up value in gold and place some longs, because eventually, and I've been saying this for some time, I know, but within the next week or two, I do believe that gold will break out above 1740 and go trading towards the monthly high at 1764. As you can see, as on the chart, I'm circling it now. That's where we tapped 3.5 to 4 weeks ago. And then once we break above there, this market will likely then go to the $1,800 level, which is the 8-year high, the 2012 high, and also will act as a huge psychological number and target for the gold market. So I have no interest right now whatsoever in selling gold. There's so many catalysts which are supporting gold right now, such as central banks across the rail keep cutting their interest rates to zero. We have also the UK, for example, today come out and said that they've just started a £100 billion buying bond stimulus program. So that's just going to devalue the British pound, and the US. We had the Power who come out earlier on this week and announced the bond buying, the corporate bond buying. So this also means that he's just devalued the US dollar, and all these catalysts help gold. Also, we have the US tensions between China. Also, there's also a very large risk at the moment of a second wave for coronavirus. So all these catalysts support the gold markets. So I am bullish, and in the US we have seen a huge spike in the cases over the past week. So this is really not good for the US economy, because some states might have to go in lockdown. I think it's Arizona and Texas. So this is what I'm looking out for going into the weekend. and on Friday. So I do support gold to break out, but I think that there could be a potential one last dip toward that $1,700 level where we could all take advantage of and place our longs. In terms of the RSI, we're at 55, so we're nowhere near overbought or oversold, and the market in theory has plenty of territory to move to the upside and downside if it wishes to do so.